Jorge Perez is chairman and CEO of the Related Group. He is the top developer, one of the top developers of multifamily homes here in Florida. Now, condo sales here were up 45% in the second quarter. Prices, though, still going down. But Perez says that the last 2 years were the toughest he has ever had. Now, one thing we talked about was the fall off in the number of people who close on properties here.
We've thought of ourselves as a very conservative company, and we used to do all these what-if scenarios, right? What if 80% of the people don't close, or what if 80% of the people close? Mm-hmm. What if 70% of the people? We never, went below like the 60% scenario, like 60% would close and 40%. That was like the word. When we had projects in which over 90% of the people said, we're not closing, it was something
90.
But Icon Brickell, without getting the price reductions, we had a minute number of sales, 2 or 3% of the people that really wanted to close. And that was something that was absolutely unexpected. We did not plan for it. We thought that people with contracts and 20% deposits would close. Mm-hmm. We have a condominium in Mexico now with 30% deposits, and all of a sudden we said, what happens? Everybody's closing. So this was a real shower, a very cold shower. We were totally unprepared. The lenders were unprepared. So from that point of view, we built too much. We did not understand that demand was in many ways a false demand. Do you know what I'm saying? That
right.
it wasn't people that really wanted to live in those apartments and they were going to close because it was their home.
Now, that was just one element of Perez's business. I also asked him about the bigger picture, what he's thought of the last 2 years overall and going forward.
The last 2 years have been definitely, from a business point of view, the toughest years that I have ever had. And we're not working for profitability. We've been working to make sure that we do the best that we can in getting rid of this inventory that we produced. And the question is, did we build too much? You know what I mean? And when you
that's a big question, though.
Sure.
I mean, there's a lot of criticism that there's still too much building going on. There's not enough realism.
Well,
about
look,
the inventory.
there's no building going on at all now. So supply has dried up almost anywhere. The housing starts, have been greatly reduced, particularly on the condominiums. So there's very few cities where you see new product going up. Mm-hmm. New York, Washington, D.C., and just a few jobs in comparison to the past. Demand, on the other side, of course, has been reduced because of unemployment and the economy. But there's no question that there's more demand than supply, and it will catch up, and there will be an equilibrium. We went out of equilibrium with supply being higher than demand, and that's when the prices went down. I definitely think now we're at an equilibrium, and if the economy, were to continue in a slow recovery, the housing market should, be okay in the next couple of years. Okay. If it doesn't, then we have problems because we have nobody with buying power and with the confidence to make that investment decision.